It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks fall following Wall Street's decline on buyer fatigue. A strengthening dollar putting pressure on the region's currencies, forcing the PBOC to step up for the yuan. Also ahead, a Bloomberg scoop. Canada preparing potential tariffs on Chinese-made EVs, aligning with moves from the US and EU. And SoftBank's Masayoshi Son is back after a hiatus. He's looking for his next big bet. He's talking up artificial superintelligence. We'll have more ahead on what that means. But first off, let's check on how the Asian trading day is shaping up. Pretty tepid end to the week, really. Most markets either flat or in modestly negative territory. We've got Japan on a lunch break, the Nikkei flat as we went to the break. Very weak yen, closing in on 159 at the moment. We'll talk about that more in a moment as well. CPI in Japan did accelerate after 2 months of slowing, but of course once you take out energy, food prices as well, the picture's somewhat different. Take a look at China, particularly the CSI 300. That's on a 5-week losing streak right now. We're set up now for the worst week in 2 months. The index really stuck in its 100 to 200 day moving average, approaching oversold territory as well. That rebound that we saw in the Hang Seng not extending into today. We've got the Hang Seng off by about 1.5% at the moment. MSCI Asia Pacific as a whole off by 0.4%. Well, let's talk a bit more about Japan's inflation. It did accelerate last month, as I mentioned, after the government increased renewables energy-related levies, and that result backs the case for the central bank to raise rates again in the coming months. Or does it? Let's get some more with Bloomberg MLive strategist Mark Cranfield in Singapore. Mark, as I mentioned there, if you pick into those inflation numbers, the picture does become a little bit murkier. But we did have headline inflation picking up after a couple of months of deceleration. How does this change the picture for the BOJ?
Well, maybe it doesn't, because investors are still very disappointed by what they heard. It was just a week ago that we had the Bank of Japan meeting, and expectations going into it were very high that we would see some concrete measures in terms of some policy tightening to add to what they did in March, and we got nothing. So people are being pretty skeptical here of what it is that is needed to push the Bank of Japan into any tightening measures. So we went into that meeting fully expecting that we would get guidance on when the next interest rate hike was going to come, particularly as the Bank of Japan probably had that CPI data in hand. They knew that inflation was starting to go towards their target, and yet they still didn't give any clues at all on that. And also we heard nothing on the increase, or rather the way in which they were going to decrease their balance sheet, reduce the total number of Japanese bonds they were holding, which would have again been seen as a slightly hawkish measure. And there was no information on that. They pushed it forward to the July meeting. If you put all that together, you can see the response in the market, which is that traders have become negative again on the Japanese yen. That's the result of the Bank of Japan pushing away any decision making until the future date, either July or August.
Yeah, so we've got the yen now just below 159. The trend seems to be pushing it closer to that 160 level. And yet there is a feeling from the MLive team that we're not going to see intervention this time. Why not?
It's a huge dilemma for the Japanese authorities. When the Japanese yen reached around 160 to the US dollar, pretty soon afterwards, we saw very heavy direct intervention in the foreign exchange market, 2 rounds of dollar selling, yen buying. And by most measures, it's a record amount of intervention from the Japanese authorities. And yet here we are, we're almost back to those same levels again a few weeks later. So now the Japanese authorities will be looking at the market saying, well, we've spent a huge amount of money and we have very little to show for it. And what would happen if they go into the market again at about the same, if they go in around 160 again, or somewhere near there, the market may just think, well, essentially they're wasting their time, and we could end up with dollar yen being higher again, and the Japanese authorities have spent even more money. So it's a huge dilemma for them until the Bank of Japan actually changed policy. So really the most effective thing to do would be for the Japanese authorities to intervene in the foreign exchange market around the same time as the Bank of Japan is actually hiking interest rates. We don't know when that's going to be, whether it's going to be July or August or sometime later. Meanwhile, the yen really is in the hands of the market, and the traders know that the yield differential with the US is so wide that it benefits them to continue being short of the Japanese yen.
Talking of weak currencies, let's take a quick look at the yuan. We had a bit of support coming from the PBOC with today's fixing. What does this speak to? A managed decline or a line in the sand for the yuan?
It looks like a managed decline. Today's action was really because the Chinese authorities were spooked by what happened yesterday in the options market. There was huge volume in the dollar-yuan options space yesterday, with people clearly putting on new bets that the yuan would weaken further. And it's quite usual for the Chinese authorities to respond the following day by being strict on what they do with the yuan fixing. So today we saw a huge gap between traders' expectations and where the dollar-yuan rate was actually set, nearly 1,500 pips, which is very, very big. And but that can only buy a bit of time for the central bank. There's not much they can do about US dollar strength that we're seeing in the rest of the world. When US yields are high, there's a weak yen, currencies on the back foot. The Swiss National Bank have just lowered interest rates, which makes the Swiss franc weaker again. Really, everything is stacking up against the Chinese authorities, making their job much, much more difficult.
All right, Bloomberg MLive strategist Mark Cranfield there. Thanks for joining us. Let's get a bit more market insight now from Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC. And Selena, I'd like to start in Japan if we can, but those CPI numbers, the headline looks pretty good. Digging into the figures, perhaps not so good. Are you one of those that is just sitting there waiting for some news, something concrete from the BOJ in terms of what's going to happen with bond purchases, what's going to happen with eventual tightening, and what it all means?
Well, actually, the CPI numbers are moving in the right direction, but actually miss market expectations. So that's a little bit of a setback. But generally, you know, dollar is king because the Fed is high for longer, and I think the pressure is really on the Japanese yen. So as far as the BOJ is concerned, you know, our initial view was that they should have probably tightened in the June meeting, but they didn't, and they basically left the option open for July or August. But without specific guidance, I think markets are a little bit in the no man's zone for the moment. I think we do expect that the BOJ will tighten, possibly by 10-15 basis points at one of the upcoming meetings. But then again, it's already priced into the market. So I think it's a little bit of a washout from that perspective. Going ahead, we do expect that, you know, with inflation and the wage negotiations coming in the right direction, the BOJ will move. It's just that, you know, until the Fed starts to cut rates, there will be pressure on the low yielders, including the Japanese yen and for the Chinese renminbi for the matter.
Yeah, I want to come back to the Fed and the yuan in a moment, but just sticking with Japan. We have the yen continuing to weaken, as we were discussing with Mark a moment ago. 160 now back in sight, but intervention not on the cards this time. Is that your view, and do you consider intervention a worthwhile pursuit anyway?
I think we have seen from the past intervention exercise is that it just buys a little bit of time. It's very hard to fight the tide when the dollar is so strong, you know, so short of having very weak data come out from the US that will add to, you know, the Fed speculation of when the rate cuts will come. You know, intervention alone is not going to turn the game around. They may try to smoothen out some of the excessive volatility in the short term, but I think it's very much a waiting game for a lot of central banks in Asia. And I think for Bank of Japan, they would fall probably in the same bucket. I mean, if you remember, the US Treasury Department now has also identified Japan to be on the FX watch list. So that also puts them under a little bit greater scrutiny in terms of any intervention measures that they may undertake in the days ahead.
Well, let's talk a little bit about expectations around the Fed, because we had jobless claims in line, housing starts declined, and for some in the market, That was enough to thinking about a little bit of repricing. We've got traders lifting bets now on a cut perhaps in August. But at the same time, we heard from Neil Kashkari saying it might take a year or two to get inflation back to target. What's your view in terms of what we might see in terms of easing from the Fed in the coming months?
Well, I think the Fed basically is in data-dependent mode. We've had strong inflation numbers and labour market numbers in the first quarter, which caused them to postpone the timing of the first hike. And then we have started seeing slightly softer inflation numbers come through in the April and May numbers. We'll probably take another 1-2 months of confirmation before the Fed is ready to move. But nevertheless, if you look at the dot plot, they have only penciled in one cut this year, 4 for 2025, 4 for 2026. In total, it's still 225 basis points cumulatively. So there's no change in the total number of cuts that they are looking at. And from Kashkari's point of view, he's probably looking at, over the span of the next 2.5 years, when inflation comes back to target, and hence, they will basically execute the plan to actually ease monetary policy by around, 2+ percentage points kind of quantum. So for us, we see that as a pushback in terms of the timing. Actually, there's no real shift in terms of the intentions to ease monetary policy. And as the incoming data continues to probably soften in the months ahead, I think that will basically open the window for the Fed to start cutting rates. I mean, that said, we have the US presidential debate coming up, and then in the run-up to the US presidential elections in November, I think the timing will become of the essence, for them to actually move before the markets get too caught up with the whole elections process.
Yes, true, and neither candidate particularly shy about spending either. But I do want to get back to the yuan, also one of those currencies being impacted by dollar strength. We did, of course, have that stronger fixing today from the PBOC. But as Mark was pointing out there, it looks more like a managed decline than a line in the sand. What's your floor for the yuan? Where do you see it heading?
Well, I think it's very much a managed decline. The line in the sand has been gradually moved over time. And like I said, it's very hard to fight the tide when the dollar is king. Trying to manage the depreciation through the fixing is one way to try and, not basically throw the door open at this juncture. But the PBOC is juggling a lot of balls at the moment. China has a lot of challenges, property market, slow growth, weak consumer sentiments. If you look at this morning's LPR fixing, the chance that, basically they didn't cut rates, that tells you that, they're really focusing more on the stability in the renminbi at this juncture. So that also means that there will be greater pressure, I think, that will build up over time for the renminbi to continue to weaken. As long as the Fed doesn't cut rates and PBOC, basically tries to hold the line in the sand, it's going to be a juggle. BOJ, PBOC, generally, and a lot of the Asian other central banks are trying to just smoothen out volatility. They are not trying to turn things around at this moment as far as the currency markets are concerned. So I think this is the general theme for most of the Asian markets. It's going to be tough.
All right, Selena, thanks very much for your views today. Selena Ling there, OCBC Chief Economist. Still to come this hour, a deep dive into opportunities in private credit markets in India and South Asia, including in the ESG space with ADM Capital. This is Bloomberg. Let's take a look at how stocks in Hong Kong and China are faring this Friday morning in China. Well, not too well is the answer. Hang Seng had been having a reasonable week up until now. Right now off by 1.7%. Not a lot of news really out of China in terms of stimulus efforts to address the underlying concerns about China's economy. That's weighing on all the equity indexes there. We've got the CSI 300 on a 5-week losing streak. Policymakers, as we discussed, did move to prop up the yuan demand today, but it's not doing a lot to prop up sentiment. A lot of red on that screen. EV stocks suffering as well in China on the news that Canada might impose tariffs in line with the US and EU. Let's get a bit more on that story. Canada preparing potential tariffs on Chinese electric vehicles, and that would bring them into line with some of their trading partners. China correspondent Min Lo joins us now with more. Min, what more do we know about this plan from Canada?
Yeah, it's hard to say how high those tariffs will eventually be. Canada is said to be just starting public consultations on this right now. And there's huge pressure on President Trudeau coming from domestic and foreign quarters to really match those tariffs introduced by the Biden administration. The U.S. have quadrupled tariffs on Chinese EVs to upwards of 100%. And then the EU has also imposed tariffs of up to 48%. And now the province of Ontario especially, which is the largest, the most populous province in Canada and also an auto manufacturing hub, is really putting pressure on the president. The Premier of Ontario saying that China is taking advantage of these low labor standards and dirty energy to flood the market with cheap vehicles that will undercut Canadian jobs. And then there is pressure from the domestic auto sector as well, who is calling for steep tariffs. They say Canada really cannot afford to sit out, especially with the review of that free trade agreement between Canada, the US and Mexico coming up. And we know Canada's auto sector is very tightly integrated with the US one. They sell parts and finished products to the US, and by far most of their exports are going into the US. So President Trudeau really have to balance between the US and China here, and of course there's the fear that China could retaliate as well.
So in terms of retaliation, what might we see and what could the impact be on China's EV sector?
Yeah, well, the short-term impact is not likely to be very huge because Canada is still a very nascent market for Chinese EVs. But of course, the risk will be that China will be blocked out of the whole market before even they made inroads into the country. We know that Tesla will be disproportionately affected because last year Canada did see this 5-fold surge in Chinese EVs, and most of that is driven by Chinese-made Teslas. But other EVs like NIO, BYD, they don't have a lot of presence in Canada as of now. Currently, Chinese EVs are tariffed at 6%, and consumers also enjoy this federal rebate program when they buy foreign-made EVs. But of course, Canada is now trying to build up its own domestic industry, pouring in billions of dollars to build up their own domestic supply chain. So the market barrier for China is just going to keep going up in the future.
All right, China correspondent Min Lo there. Still to come on Bloomberg Markets Asia, exclusive interview with Oaktree Capital Management co-chair Howard Marks. We'll hear why he's refusing to back away from investments in China. That's next. This is Bloomberg. Veteran investor Howard Marks says he's not backing away from China. The Oaktree Capital co-chair told us exclusively how the company handled the fallout from Evergrande's downfall and where they're looking next to place their bets.
Well, given that the U.S. is priced highly, a lot of the opportunities for bargains are outside the U.S. Obviously, China is on a lot of people's uninvestable list. That tends to depress its value, and we like to look at things that other people aren't interested in. So China is one good example. But you know, we are not macro investors. We're not top down. We don't affect a geographic diversification for its own sake. We go where the bargains are, and we're finding lots of bargains in many places.
And Howard, you mentioned about China giving you good opportunities outside the U.S. I mean, in particular, I know you guys focus more on the loan side of things when it comes to your distress strategy in China. I mean, how are you viewing distressed properties now in the mainland? Is there a sense that you're adding to your exposure in any way or backing away from this sector now?
We've been investors in NPLs for close to 10 years, non-performing loans, that is. Every banking system generates some non-performing loans. China has set up mechanisms to get them off the bank's books. And we've been participating for, as I say, close to 10 years. The legal system has operated as it should. We're happy to continue in that role, and we're not backing away.
In terms of, I mean, obviously, you were kind of caught up in what happened with Evergrande as a creditor. I'm just wondering, were there any lessons that were learned from this fallout from Evergrande and this downfall? And how much of the assets was Oaktree able to salvage?
The lesson is to be careful when supply is created by strong availability of capital. Capital was made available to the property development sector so that it could contribute to GDP growth. It expanded rapidly. It made use of that capital. It built some buildings which from time to time turned out to have supply exceeding demand. We participated. I think another important lesson is it's a good idea to get collateral. We got collateral on our loans to Evergrande when many others didn't. And we think we're coming out very well. As I mentioned, the legal system is performing for us. We have gotten control of the collateral, and there haven't been any disappointments on that front. So, as I say, we're continuing with our involvement.
That's Oaktree Capital Management co-chair Howard Marks there, speaking exclusively to Bloomberg. Now, some of the other global stories that we're following. TikTok and its China-based parent company ByteDance are arguing that Washington could have enacted less restrictive alternatives to address national security concerns. In a court filing, they say the US government has multiple layers of safeguards, but Congress instead enacted a ban earlier this year. TikTok has maintained there is no evidence the app poses a national security threat. Swiss watch exports fell in May due to a persistent slowdown in demand for premium timepieces in China and Hong Kong. The Federation of the Swiss Watch Industry says shipments by value fell 2.2% to about $2.6 billion. Exports to mainland China were down 18%, while sales in the key trading hub of Hong Kong slumped close to a quarter. Okay, let's take a look at some of the stocks that we're watching in Asia trade. I want to start off with solar stocks in China. It's a bright spot. We're seeing a bit of red on the screen in terms of Chinese equities, but we're seeing solar manufacturers gain. Why? Well, China has promised to guide capacity expansions, avoid redundant investments in the sector, so that addresses some of the supply issues there. The National Energy Administration saying it's going to monitor solar factory utilization and expansion plans, and that'll help improve market conditions, and already we're seeing stocks rising. Take a look at SoftBank as well. The SoftBank AGM is underway. We'll be keeping an eye out for details there. Shares currently 1.8% lower, but we had heard from Masayoshi Son back from a long hiatus. He's saying, well, for the next big move, well, you guessed it, they're going to look at AI and possibly power needs around AI as well. Right, this is what's moving in terms of global market movers as well. A lot of red on that screen also. We'll be back in a few moments with more. This is Bloomberg.
Don't worry about that SoftBank share price stuff. Jim dreams a big dream. Why don't you support Masayoshi Son, who has a big dream? I was born to realize ASI. AGI stimulates AGI and drive evolution. Less than 10 years, ASI will come.
All right, SoftBank Group founder Masayoshi Son there, speaking at the company's annual general meeting. Well, let's get more on what we heard from that meeting with our technology editor, Mayumi Negishi in Tokyo. So, Mayumi, Masayoshi Son there pushing the concept of artificial superintelligence in his presentation today. Now, That, I think, is what Elon Musk was talking about when he said summoning the demon. Tell us a bit more, and why is he counting on it?
Well, we saw Masayoshi Son, who was much more energized today than he has been in the past. He was very upbeat. He had at last year's AGM, he was actually much more humble. He had made some big mistakes and lost billions of dollars. And he said that he suffered a crisis of confidence. But the big talking Masayoshi Son that we know and love is back. He really didn't go into details, but remember, he's sitting on quite a bit of a cash pile now. So he has that behind him, and the blessing of his chief financial officer, Goto, who has traditionally been sort of his foil and the brakes on any of his big bets. So he has grandiose dreams. He said his mission is now to help humans evolve and to bring about artificial super intelligence and unleash this demon.
Yeah, let's see how that works out. Okay, so Masayoshi Son, obviously famous for big ideas, big bets as well. Anything else in that presentation that stood out for you?
Well, he came. There were questions about buybacks, about the share price, and he did, as he's done in the past, kind of scolded shareholders to think bigger. He said share prices are a small matter, compared to the great mission that's tasked before SoftBank and the shareholders to bring about the next AI revolution. And so, it was kind of light on details, but we really got a sense of how Masayoshi Son, 66 years old, is kind of gearing up for what might be his last big challenge. He's said in the past how he's always felt that his legacy failed compared to other tech giants like Steve Jobs, and it really felt like he was gearing up for something big. And when Son talks about big, we're not talking about pennies or millions of dollars. We're talking about billions, and so we'll see. He did expound a lot about how ARM will be center to that push.
Yeah, well, history suggests that he's not afraid of betting big, but SoftBank's history is also littered with some billion-dollar failures, chief among them WeWork. Are there any guardrails in place to make the investing decisions perhaps a little bit more careful in future?
I think the one guardrail is he did say that his experience of the past have been practice for what is to come. He has much more, many more lieutenants with financial expertise now, with M&A expertise. So there may be some financial schemes that might lower SoftBank's direct risk to his next bet. We've talked to executives who have spoken about possible sort of project finance like schemes, about ways in which they can get other investors on board to support their next push. But the biggest guardrail would have to be the burnt hand. He's really burnt his hands many times, and hopefully he's learned something from that.
All right, a very well-bound burnt hand there. Our technology editor Mayumi Negishi in Tokyo, keeping an eye on that SoftBank AGM. We're also keeping an eye, of course, on Norinchukin Bank. The CEO saying that $1.5 trillion loss may change on financial conditions. He's speaking on the sidelines there of its AGM. 1.5 trillion yen, $9.5 billion. That was triple the estimates from about a month ago. The CEO said when asked about the expected losses possibly exceeding that number, it depends on the financial environment, he told reporters at the AGM. So expected losses at Norinchukin may swell to 1.5 trillion yen. That's $9.5 billion. All right, let's take a look at how markets are tracking over in Japan. Pretty much the story of the region at the moment. Some modest losses there for the Nikkei. We are off by about 0.1%. The topic's in positive territory, and the yen just continues to weaken, 158.93 against the dollar at the moment. We did, of course, have CPI out of Japan a short time ago for the month of May. It did accelerate after 2 months of slowing, not as much as expected, though. And once you take out food and energy, the picture gets a whole lot more confusing as well. It doesn't make the decision-making process a lot easier for the Bank of Japan, and we're still operating at a void in terms of what happens with bond buying. All right, let's get to the top geopolitical stories we're following now. The Russian President Vladimir Putin isn't ruling out providing North Korea with high-precision weapons after signing a defense pact with Kim Jong-un. Putin says Russia reserves the right to supply arms in other regions, comparing it to Western nations' military support for Ukraine. The Russia-North Korea pact is also prompting South Korea to consider ending its own ban on sending lethal weapons to Ukraine. The US has criticized what it calls China's escalatory actions in the South China Sea after recent clashes with Philippine ships and crew. The State Department says Secretary Antony Blinken has repeated Washington's ironclad commitment to its defense treaty with Manila. The Philippines says a crewman lost a finger on Monday when a military resupply mission clashed with armed Chinese forces near a disputed shoal. The Philippines is reportedly reinforcing a broken-down warship that serves as its toehold in a disputed part of the South China Sea. The Financial Times says the Philippine military has conducted missions in recent months to bolster the rusting vessel amid fears that it's in danger of breaking apart. Manila ran the ship aground in 1999 to reinforce its claim over the area, which China also says is part of its territory. The head of Tibet's government in exile is calling on other countries to join the US in pressing China for direct talks. Penpa Sering spoke to us as a delegation of US lawmakers visited the Tibetan spiritual leader, the Dalai Lama, in the Indian town of Dharamshala. He gave us his response to new US legislation boosting support for Tibet's exiled leaders.
Tibet Resolve Act is a significant law once President Biden signs it into an act in the next few days, because this act talks about China's disinformation on Tibetan history. After I came into this office, we decided to change our strategy a little bit, even though we are committed to the middle way policy of His Holiness the Dalai Lama, trying to seek a non-violent, negotiated, mutually beneficial, lasting solution to the Sino-Tibet conflict. But if there is no recognition to the polarities, when we talk about middle way, there is a middle way only if there are polarities. In this case, it could be multidimensional polarities, but in the political sense, one polarity is the situation of Tibet right now under the repressive communist government, and the other polarity is the historical status of Tibet as an independent state. So we have not been just doing the talk, but we have been working very closely with the US Congress since June 2022, where we had the first hearing or testimony on the historical status of Tibet in the US Congress for the first time.
On the ground, as the leader of the Tibetan people and the government of Tibet in exile, how much of a difference does this make? How much does your life change or your work change with this bill being passed and President Biden likely to, clear it as law?
For China, sovereignty is a major issue. And that is also the reason why we thought we addressed their major concern when His Holiness proposed the middle way. So by focusing on the historical status, it's more like we are trying to wrestle with China by holding their horns. So this will be a new dimension to our struggle. This will be a new tool in our hands to reach out to other governments and see whether they can take similar position as the United States, and which would force China to come and negotiate with us.
Prime Minister, there were some reports that your government was in some kind of back channel talks. Can you give us an understanding? When did that start? Where is it now? And what do you expect out of it?
There was some outreach since January last year, so it has already been 1.5 years already, and but there's nothing concrete to talk about. It's just interlocutor that I have appointed, and there are interlocutors from Beijing side, and we just relay messages to each other. If you look at what President Xi Jinping is doing to the whole of China, and more particularly the nationality regions like Tibet or East Turkestan or Mongolia, and more so in Hong Kong, it doesn't look very likely that we can have too much expectations out of these things. The first thing would be to re-establish contact. Even that has, in the last 1.5 years, we have not been able to do that. So it's still stuck there based on some of their thinkings and how we perceive our things. So there is nothing concrete to talk about, and we don't have too much expectations if you look at what Xi Jinping is doing. But again, if you ask me, when you don't have expectation while you're still dealing with China, we can't think only short term. We have to think long term. We travel around the world, speak with governments, and they assure us that there are a lot of diversification going on, there are a lot of de-risking going on, but not so much visible right now because decoupling is almost impossible because some countries have a lot of investment in China. But eventually, I think it should take its shape. And as we travel around the world, now more and more people want to understand China for what it is. And we have lived with China for centuries as neighbors. And we know that China respects only strength, not weakness. So we ask people or countries to stand up for their values of freedom and human dignity and democracy and all those things, which they so cherish in their own countries, which is taken for granted that is not there in China.
Pimpa Sering there, the Prime Minister of the Tibetan government in exile, speaking with Bloomberg's Sudhi Ranjan Sen. And China's Foreign Ministry yesterday addressed the US lawmakers' visit to the Dalai Lama at a regular press briefing, saying, quote, "The so-called Tibetan government in exile is an out-and-out separatist political group and an illegal organisation in total violation of China's constitution and laws." Coming up on the India focus, we're going to be speaking with the ADM Capital's Sabita Prakash for her outlook for the private credit market in India and South Asia. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You are watching the India focus, and here's a look at how Indian markets are doing in pre-market trade. Looking good, actually, bucking the trend we've seen elsewhere across the Asia Pacific today. It's tech stocks leading the way. GE Power India shares also trading higher in the pre-market. Well, private credit is fast emerging as an alternative investment option in India and a financing vehicle for startups and SMEs that are struggling to find other sources of capital. Joining us now to discuss her outlook for India's private credit market is Sabita Prakash, MD of ADM Capital, an APAC-focused private credit firm with about $2 billion in assets under management. So thanks so much for joining us, Sabita. You are responsible for sourcing, executing investments in India, South Asia as well. Where are you seeing good opportunities right now?
Thank you for having me, Paul. As you rightly said, the opportunity in Asia generally, and India in particular, is in the SME sector, the small and medium enterprises. As everyone knows, they contribute a significant percentage of GDP. In India, it's as much as 40%, and maybe rising to 50%. these SMEs don't find financing from traditional financing sector. And more importantly, going forward, they will need financing from nimble, flexible capital providers to take advantage of the significant changes that are happening in the marketplace today. And that is where ADM Capital and private credit comes in. And we've done financing already in the space over the last 20 years in India.
So, and in terms of numbers, how much credit did you deploy in India and elsewhere in the region last year compared to years prior?
So over the last few years, the opportunity in India has been significant, and we have deployed over 230 million in this space, both in terms of new companies, as well as new opportunities, as well as follow-on opportunities with existing companies as they seek to grow their asset base. And it has been pretty diverse in different sectors as well.
So how are some of the challenges, though, in India when you're looking at secured lending?
So while on the one hand, opportunities are immense, there are challenges as well, particularly in terms of the idiosyncratic nature, not only of sectors, but also of investing in different regions. More importantly, in the last several years, with the macro situation being the way it has been, as well as the depth and diversity of sectors, I think what's important with the rising interest rate scenario over the world and in India as well is that we need to be very cognizant that there is an impact on individual companies, which could work very differently for different companies and sectors. So the ability to be very selective, do our homework, and do the due diligence required to support those companies that will survive and grow in this kind of environment is important.
You've also got to focus on smart cities, urbanisation. However, India has a somewhat creaking electricity grid. Load shedding is quite common, particularly in the brutal summer that India has just endured. How does this impact your spending and the way the people you lend to are able to develop?
Yes, and this actually counts even more towards what is the need of the hour, which is, as you rightly said, Paul, the need of the hour is to spend on making cities smarter. It's not necessarily only electricity, which is going to be really the need of the hour, but in various other kinds of infrastructure. When it comes to ADM Capital and the way we look at the SME universe, the way we would like to look at smart cities is by looking at the supply chain of infrastructure companies and helping those SMEs in the supply chain of these various infrastructure sectors to grow their business to meet demand. At the same time, focusing on a combination of technology and sustainability in order to make cities more efficient, more smart, more sustainable to encounter the challenges of the longer term.
We also launched an Indonesia-focused fund last year. It's got an ESG focus as well. I know you can't disclose performance, but can you give us a sense of how satisfied you are with the performance and some detail on the investments that have been made?
The fund in Indonesia is actually looking at an impactful sector, whereas what we are doing in India at the moment is what we call ESG integrated investments. In other words, ADM Capital as a fund and as a company is very focused on improving the ESG capability and in ESG aspects of our transaction and all our transactions. And within India, we have focused on companies that we have helped in improving incrementally their environment, social, and governance aspects, both in terms of improving, for instance, gender ratios in companies, or being even able to accommodate the risks of the severe climatic changes that we are seeing in the marketplace today, whether you're talking of Indonesia or India or anywhere else in Asia. So I would say we are pretty satisfied.
How do you balance how do you find a balance between those impact metrics and financial metrics?
Very interesting aspect to consider. The way we look at impact metrics and the way we encourage our companies, more importantly, to look at impact metrics is that if they are not being met, they are a risk to the company's own financial future. If you talk of climate risks and carbon risks and environmental risks, we're seeing all across the region. We're talking of the heat wave in India, for instance. We were talking of flooding a while earlier. All that can impact the financials of companies. And therefore, to look at it as a risk is very much supposedly a part of our underwriting due diligence. The other aspect is that of social indicators. A more diversified gender balance definitely helps towards rounded growth and more fair growth for companies that they can sustain in future. And so the long story short is that it should not really affect returns when we're seeking impact from these factors.
All right, Sapita Prakash, MD of ADM Capital, thanks so much for joining us today. Let's take a look at how the Indian markets are faring in the meantime. And it's a mostly, well, modestly risk-on day. We'll take that compared to what we're seeing elsewhere. We've got the Sensex right now better by 0.1%. Similar story there on the Nifty 100. It's Indian tech stocks that are doing reasonably well. Take a look at the rupee as well. We've got the rupee hovering around near record lows at the moment. All right, we are hoping to bring you some live pictures of the sunrise at Stonehenge. It's an important day, of course. It is the summer solstice today, and it's pleasing to see the sun. It's always a bit hit and miss when it comes to that particular part of England, but this is the longest day of the year. The sun rising behind the heel stone, which is some distance away from the circle, and then it shines directly onto the center altar stone. So those first stones were laid in 2,500 BC. Always attracts a crowd that you can see there, the summer solstice at Stonehenge in Salisbury in the United Kingdom.